What's up, guys? It's Chris again. Today we are going to be talking about time frames and what time frames I use. Just a quick little video about a couple things on why I use these time frames and just talk a little bit about how you can use them to your benefit depending on what type of trade you're using. So first thing here is just talking about depending on what type of trade you're about to enter, and this is pretty self-explanatory, but sometimes people focus too hard on if they're entering a long and they are looking at a 5-minute chart and maybe they start to freak out a little bit because on the 5 minute it's going down a little bit. You need to understand that you're longing the stock, so you should be zooming out, looking at a 4-hour chart, a 1 day, a 1 hour, and basing your entry and exit points off of that, because you have obviously 1 hour supports, like 1 hour supply or daily supply or whatever it may be, and using these different time frames can definitely help you, but at the same time, if you're not using them right, it can definitely hurt your trading, and it can force you to potentially exit a position too early. So first thing I'll say is I would try and stay away from 1 minute time frames. I mean, it doesn't really, I don't even have, here, let me get it up. So, I mean, you can just see on the 1 minute, it's just too much going on. You can get faked out a bunch, especially with the moving averages. I mean, it does, this is the 200 here, but that's something I wanted to talk about later. But we can see it here that some people don't necessarily understand. When you change your time frame, the moving averages are going to obviously look different. So here we're way above the 200, but on the 1 minute we're right at it right here. That's just because obviously when you're on a different time frame, the calculation for the input for these lines is going to be a little different. So I don't like the 1 minute because, I mean, you can get really faked out and see these moves that aren't necessarily big moves, but think that maybe one of these candles, like this candle, looks like a relatively big candle, but if you zoom out on a 15-minute time frame, the graph looks almost entirely different because these moves are much less defined by the candles, and it can definitely, I mean, here's open. So yeah, we're zoomed out. But you can see that let me try and get this. Get this to Apple, put this on the 1 minute chart, and we'll see where open is. So on August 10th, opens right around here, and we can see we have 9:30 right around here. So, I mean, this move down looks, right here actually, 9:30. So this was a pretty big move down, but you can see basically all these green candles on the way down, but on the 15-minute chart, we really only have that one green candle at open, right at open, we had that one green candle, and then aside from that, on the 15-minute chart, you can just see we had red candles the whole way. I mean, you could get pretty easily faked out here on a move back up, when on the 15-minute chart, you can see that you're really still in this downtrend, and you could have gotten faked out down here, potentially playing some support. I mean, it depends on what you're doing, but I really don't like the 1 minute time frame. I definitely prefer the 5-minute or 15-minute time frame when I'm day trading, especially if you're scalping. I mean, you can look at the 1 minute time frame. Some people do. It really depends, but I like to look at the 5-minute. You can even look at a 3-minute chart, but I think 5 minutes is definitely my personal favorite, and I think it follows. It definitely doesn't allow yourself, especially if you're playing 5-minute close, like a lot of our analysts always say that basically 5-minute close below this level because you don't want to just get wicked out. And so playing the 5-minute close oftentimes helps you avoid getting faked out and exiting a trade a little too early. So like I said, for day trading, 5-minute, 15-minute. So when I am day trading, though, I definitely like to zoom out and just see where the stock is in terms of where it's been just in the past. I mean, you can see here on Apple, like if you're just looking at the daily chart for the 5-minute over here, you can maybe convince yourself that, oh, Apple's at a really, really good buy spot. And yeah, if you bought it right here, bought calls here for, I don't know, say 450 and rode it all the way up in the money, you could make, that's a good move there. That's a really big move, $9 move. So not huge the way Apple's been moving, but still, you can make a lot of money. But it's good to zoom out and see here on the 1 day and a lot of people who obviously trade every day know where Apple is at today, but going with any other stock or something that you're looking at, seeing where it is in relation to where it's been in history is a really good idea. I mean, so on TradingView, we can see it's at all-time highs because they adjust for the stock splits. Before Apple's last split, they were at like 600 something before their 7-1 split. But still, in relation to how it, however TradingView calculated this to be, it's the highest it's ever been. And so that's just good to know when entering positions. I mean, you're at all-time highs right here, so there's really no levels you can officially have except for psychological and like going off price action. So that's definitely good to look at just at all times, especially if you're doing swing trading or longs, or if you're trading a couple weeks out. It's good to look at the daily chart and just see where you have some. I mean, here, say you're playing this move up on Apple. We have this retrace here, and you want to play this potential support on. This is the monthly. Let me go to the daily. So where are we? So yeah, so I mean, this is obviously time frames out, but say you're playing this bounce and say you're here on this day is what I'm trying to say, and you look at this and you zoom out on the 1 day time frame and you see that you have this previous level of resistance right here that could act as potential support as you broke. So you're looking for it on this 1 day chart, and you see that you get you break down below it, but then you find some support a little bit lower right around here where there was some previous resistance for a move back up, and you could enter potential longs at that position. So like I said, it's really going off of what type of trade you're trying to enter. If you're trying to be in and out really quick with a quick scalp, if you're catching just a quick fib bounce on the 5 day. I mean, if you're looking at a fib on a 1 day chart, you should be entering positions that are at least a week at the end of the week or 2 weeks out in expiration, because you're playing the day chart, so you want the whole day move. So you shouldn't be freaking out about a slight move down on a 5-minute chart if you're playing a daily support level. So I think that's definitely something important to understand when you're trading. A lot of people have been asking me what time frames I use and what I prefer, and I think it's honestly just depends on what type of position you're entering. And that is pretty much it for this video. As always, message me if you have any questions or need any help with anything. But I hope this was helpful for some of you guys, and as always, stay green.